Hey guys, so we've already talked about Bitcoin, which is currently the most valued currency on the planet. But have you considered if you should put your money in stocks or Bitcoin? Investors who are concerned about the stock market may seek out alternative assets like Bitcoin. When contemplating cryptocurrencies, however, you should evaluate your entire portfolio goals as well as your risk tolerance. Learn how to invest in Bitcoin rather than stocks in order to determine whether or not adding the cryptocurrency to your portfolio is the appropriate move for you. So in today's video, we're going to talk about whether you should invest in stocks or Bitcoin. Let's begin. The original ambition of cryptocurrencies developers was for it to become a currency that was as widely accepted as cash and credit. Many individuals now confuse cryptocurrencies with stock, despite the fact that the two are absolutely unrelated. Let's look at some of the key distinctions between cryptocurrency and stocks. One of the differences between crypto and stocks is how they are valued. Stocks are backed by real businesses that are expected to make money. They include tangible assets in their valuation, and math may be used to establish whether a stock is valued correctly based on market prices. Companies, on the other hand, do not always back cryptocurrencies. They are generally valued depending on how popular they are. While some are also valued depending on how useful they are, it's not always straightforward to forecast whether a currency is worth it because it's a more subjective estimate. You can use this material to learn more about crypto, but it is not the financial advice. Before making critical financial decisions like purchasing or selling crypto, you should consult with a professional advisor of your choice. 1. How much you have. When you purchase crypto, you become the owner of a specific amount of digital money. Crypto may one day be used in transactions in the same way that other currencies are, but for now it is largely a store of value that you may keep or sell. Stocks, on the other hand, are issued by firms as kind of equity or ownership in the company. 2. Variability. Cryptocurrencies and stocks both have the potential to fluctuate in value, thus investing in either is risky. Cryptocurrency, on the other hand, has a reputation of abrupt and severe price shifts that can occur without warning. Stocks, on the other hand, are directly linked to firms that are required to publicly and on a regular basis explain how they've been doing and how they anticipate doing in the future. This information can be used by investors to make well-informed selections. 3. Manner in which they are governed. To safeguard fair trading, federal organizations such as the U.S. Securities and Exchange Commission (SEC) have authority over the whole stock market. The crypto market, on the other hand, is currently regulated by no central body. Governance for each crypto is split among individuals responsible for developing and maintaining its technology. 4. Operational hours. The cryptocurrency market is open 24 hours a day, 365 days a year. Even when the clock strikes midnight on New Year's Eve, the price of cryptocurrencies will fluctuate. The stock market is open Monday through Friday, but it is closed on weekends, holidays, and evenings. The risk of Bitcoin versus the risk of stock. Investing entails some risk. For a variety of causes, the global economy could crash. Corporations may go insolvent. In a more favorable light, a stock could rise in value over time. When deciding whether or not to add new assets to your portfolio, risk must be considered. Kirk Chisholm, a wealth manager and alternative investment specialist at Innovative Advisory Group, told The Balance over the phone. There's a risk that it won't grow. Dividends might be cut and many people compare performance to the S&P 500, which means you run the risk of trying to keep up with the Joneses. However, he pointed out that these are dangers that many investors face. Stocks are unique in that there is some direction that can be used to predict where the price will go. To determine a company's financial health, you can take into consideration items like price to earnings or P/E ratio. Bitcoin, according to David Stein, a former chief investment strategist and portfolio manager for an investment fund, lacks the forecasters that stock do. Cryptocurrency is speculative, completely based on supply and demand. Stein explained, all currencies are to some degree based on what people are willing to pay, but it's different with crypto like Bitcoin. Unlike other currencies like the dollar or gold, it's much smaller market with regards to its overall size, so it's more subject of big swings. Bitcoin, according to both Chisholm and Stein, is a very new development that hasn't yet gained widespread acceptance. This introduces a new element of risk because it might be replaced by more efficient digital currencies or legislated out of existence. The evolution of Bitcoin versus the evolution of stocks. While you can predict future results based on historical performances, it's good to look at how different investments have performed over time. The price of Bitcoin ranged from between $200 and $500 per coin in 2015. However, the price unexpectedly surged in 2017, reaching a peak of $19,891 before plummeting to below $3,500 in December 2018. Bitcoin's price has fluctuated significantly in 2020, ranging from $3,858 on March 12 to $9,074 on July 5th. Stocks haven't grown as quickly as they used to, but they've remained more consistent since 2015. In early 2015, the S&P 500 index hovered around $2,000. Although they have been ups and downs since then, the S&P 500 is now trading at roughly $3,100 as of July 2020. In early 2015, the Dow Jones Industrial Average was trading between $17,000 and $18,000. When Bitcoin reached around $20,000 in December 2017, the DJIA was around $24,000. Bitcoin has been volatile since its inception. Since there was no natural way to value it, according to Chisholm, it went to $20,000 because everyone was hearing the news and people didn't want to miss out. Then it went to $3,000 and now it's almost back to $10,000. Stocks have stronger long-term and historical support. Despite having ups and downs and some volatility in the short term, Chisholm stated there is an expectation that the stock market will be propped up. That expectation isn't there for Bitcoin because stocks are more established and expected to do well. The stock market has historically generated annual returns of roughly 10%. Bitcoin, on the other hand, is a different issue. Who is suitable for stocks? Stocks are likely to be appropriate for the majority of people's portfolios. You can come up with a valued base in profits and it's a more stable investment due to its underlying characteristics. Furthermore, Stein believes it is reasonable to assume that despite some short-term volatility, most businesses will continue to operate in the future and hence provide stability. Is Bitcoin right for you? If you're seeking a little more variety in your portfolio, Bitcoin might be a good fit. Bitcoin and other cryptocurrencies offer an alternative to more traditional investments. Bitcoin is helpful if you want to have some assets that aren't dominated in the dollar or other home currencies, Stein explained. Even if you think Bitcoin might be a good fit for your portfolio, Stein and Chisholm agreed that it shouldn't be the primary emphasis on your investment strategy. It all boils down to how much risk you have and can tolerate. Is Bitcoin still a good investment? Gone are the days when you could buy a single Bitcoin for less than $1,000. With that in mind, as well as the risks, you might be wondering if it's too late to invest. If you believe in the thesis of Bitcoin, there's still good reason to consider it, but be careful about how much of your portfolio you devote to it, Chisholm advised. Stein said he has 3% of his portfolio invested in cryptocurrencies, so he thinks it's worth making an investment if it fits your goals. What are the risks of using Bitcoin? One of the biggest risks of investing in Bitcoin, according to Stein, is that it could vanish. There are plenty of options to pick from if you want to replace Bitcoin with something else. Furthermore, stock markets have been in the United States since the late 1700s. Bitcoin, on the other hand, is a relatively new asset, having been introduced in the late 2000s. If you're looking for a long-term trade record, Bitcoin just doesn't cut it. Another risk is that Bitcoin is not subject to the same SEC inspection as regulated security markets as such as the stock exchange. Finally, keep in mind that the price of Bitcoin is more volatile than the price of stocks. All of these variables contribute to a level of risk and uncertainty that could put investors at risk. Before deciding if Bitcoin or stocks are the better investment for your portfolio, do your research and think about how your risk tolerance. So that's it for today's video. Please watch our playlist on cryptocurrency where I explain everything. Friends, do not forget to like, share, subscribe to the channel, and press the bell icon and click notification all for more amazing videos. And do leave a comment in the comment section below. I'll be back with some more mind-blowing contents in the next video. Till then, bye.